Great. Yeah, so if you could just give like a kind of a brief background on yourself, and then if you prepare a presentation, we could kind of go through that and then leave some time for Q&A.
Yeah,
That works.
yeah. We could do a presentation later. So yeah, like a brief intro of myself. I started UXD protocol last year during summer, so it's been like almost a year since I started the project. I first started it by writing a white paper and pitching VCs and recruiting engineers. Basically, I came up with the idea when I was reading an article on Tether, where it was saying that like basically fiat-backed stablecoins have this problem where they need bank accounts, but most of the major banks in the US or developed countries will not accept Tether as their clients, so they have to go to like these more smaller, less established, like shady banks basically. And basically what happened was then one of these banks stole Tether's money, and Tether was unbacked 100%. They were not like 100% backed, and then they had to do this IEO and refund their capital. And I was like, okay, well, if you can create a stable coin that's crypto native that doesn't interact with the banking system in any way, that would kind of make it interesting. And then that's how I came up with like this delta neutral back stablecoin idea, because I would create delta neutral position by myself, and I knew that it was safe and also generates revenue or interest. So that's how I came up with the idea. Before UXD protocol, I used to work at Bitflyer, which is a cryptocurrency exchange in Japan. So I worked in strategy, research, and investments. And then prior to Bitflyer, I worked at a Japanese bank as a derivatives trader. So that's my rough background.
Sounds great. Thanks for taking the time to speak with us. Yeah, I could probably just like go right into presentation. That works for you.
Yeah. Let's do it. So let me share my screen.
Also, for those who are not that familiar, if you could just give like a brief definition of what you mean by delta neutral, because I feel like that's kind of
Oh
one of
yeah,
the components of the protocol.
right. Yeah, I'll definitely explain what a delta neutral position is. Um, so okay, so UXD protocol is an algo stablecoin that's backed 100% by a delta neutral position. So let me explain first what a delta neutral position is. A delta neutral position is a position in which you combine a spot position and a futures position, and you create a position that that is not affected by the price of the underlying asset. So if you're long one BTC spot and you're short one BTC perpetual swap, you are protected from price fluctuations of Bitcoin. If the price of Bitcoin goes up, you make money on the BTC spot position, but you lose money on the BTC short futures position. If the price of Bitcoin goes down, you lose money on the BTC spot position, but you make money on the futures position, and that that profit and loss cancels each other out, and so you are perfectly hedged. So that's what a delta neutral position is, and a lot of people in TradFi use this strategy to generate interest, right? Because you make an interest revenue from the spread, but like the price of Bitcoin fluctuating doesn't affect your position. So it's a low risk way of making money. In crypto, you use perpetual swaps. You can use like normal futures, but in crypto, it's more common to use perpetual swaps, and you make money from the funding rate. So that's like a brief explanation for a delta what a delta neutral position is. So this is the content. I'll go through like how basically what UXD protocol is and how it works. And then from there, explain like what the strength is, like how UXD protocol is different from other stablecoins. And then we'll go through what the market structure is like and the governance token that we're going to create. So our mission is to create a stable store of value that is crypto native. So as stated before, I want to create a stablecoin that does not interact with the banking system in any way, so that users can use a stable coin that is stable and also censorship resistant. And so this is a common the graph or the I don't know what you call it, but this triangle is something that is often seen in crypto, especially if you're into stablecoins. And it's basically the stablecoin trilemma, which is that there is no stablecoin that is decentralized, stable, and capital efficient. Or at least it's very difficult to create a stablecoin that has all three characteristics. So you have like Tether, you have a stablecoin like Tether, which is fiat collateralized. And so it's stable and it's also capital efficient, but it's not decentralized. So it's not censorship resistant. And then you have stablecoins that are crypto collateralized like DAI. So like DAI is relatively stable. It's relatively decentralized, but it's not capital efficient. You need $150 of ETH to mint $100 of DAI. So it's not really capital efficient. And then you have something like basis cash or basis cash or empty set dollar or these algo stable coins, which are decentralized and it's capital efficient, but they tend to lose its peg. So it's not really stable. And so there's this stablecoin trilemma problem. And basically what everyone tries to do nowadays is they try to create a stablecoin that solves all three, or is at least a good stablecoin in terms of trade-off. And so what we think that we have a good solution to the stablecoin trilemma. Basically, well, first of all, it will be stable because UXD is 100% backed by the delta neutral position. So users can always mint redeem UXD for an equivalent amount of crypto. So we're issued on Solana, so it will be SOL at first, but like you can exchange SOL for UXD, and vice versa. You can always exchange UXD for SOL at that same price. And this will be ensured because there will be arbitrage between our app and between cryptocurrency exchanges. So it's very likely that it will keep its peg. And then it's also capital efficient because it only requires, you can mint 100 UXD with 100 SOL and vice versa. So it's 100% capital efficient. And then it's also decentralized because there's no custodial risk. So this is a high level way of how it works. So user A wants to mint UXD. So how he would do it is he deposits SOL to the UXD protocol vault. The vault takes the SOL and then sends it to a derivative DEX. So on Solana, I don't know how much you know about Solana, but there's a derivative DEX called Mango Markets, which already supports SOL perps. So UXD protocol vault will automatically send the SOL to Mango Markets, and then on Mango Markets we will just short one SOL perp. So now you have a delta neutral position on the derivative DEX. Now user B wants to redeem the UXD for SOL. He will then send the UXD to UXD protocol vault. That protocol vault will burn the UXD, and the derivative DEX will unwind the delta neutral position, and the SOL will then be sent to the UXD protocol vault, and user B receives the SOL. So this is non-custodial, so users can always, they don't have to trust, like we're not like a company that holds user funds. It's all done in a smart contract, so users do not have to trust us. So basically this mechanism ensures that the UXD protocol is decentralized and trustless. So this is like a recap of what I said, but the strength is, like, first, it's interest bearing. So perpetual swaps have something called a funding rate, which is basically like a interest payment, which shorts receives from longs, or longs receives from shorts, and it depends on the market structure, but it tends to be positive. on average. So when we create a delta neutral position, we receive interest, and this interest will be then paid out to the UXD holders. So you'll receive interest from holding on to UXD. And also it's price stable. So this is a recap, but since it's 100% backed, users UXD will be stable. And then since we don't interact with the banking system, it's crypto native, so it's trustless and decentralized. So one of the questions that we get a lot is like, what do you do if the funding rate is negative? Because there are situations where the funding rate is negative, and what we do is we create an insurance fund, and that insurance fund pays out the negative funding rate. And how we fund the insurance fund is, first we do a token sale. So we will do a token sale, and the proceeds will all go to the insurance fund. And then second is part of the positive funding rate. So when the funding rate is positive, part of that like positive funding rate will go to the insurance fund to capitalize it. And then third one is liquidity mining rewards from other protocols. So we will the funds in the insurance fund will be used to become LPs in stablecoin AMMs. So like on Saver or on Mercurial Finance, these are stablecoin swap AMMs. We will become LP of those pools, and we receive the liquidity mining rewards and also the fees, and then that will be used to capitalize the insurance fund. And we'll also have an insurance fund staking program. So users will be able to stake UXP and receive UXP in return, and then they will actually be taking the risk of the insurance fund. So these are the ways in which we make sure that the insurance fund is well capitalized. So this is the market structure for. So like one of the questions we get a lot is like, okay, so is the funding rate going to be positive on average, or is it going to be negative? And you can see from this graph, this is from Skew, it shows the BTC futures annualized rolling 3-month basis. So you take a long position in the spot and you short a 3-month futures. So a 3 months in the future futures. And basically you keep on doing this over and over, and then it plots the graph of what the return will be like. And you can see that on average it's very high. It tends to be close to 10%. And this is from, well, a little bit before August 20. I think it was June from June till February. So from June 2020 to February 2020. So this is like a graph that's like in a bull market, but I have back tested it including bear markets, and it was still positive. So you can expect the funding rate to be positive on average. So this is the graph that kind of shows you can kind of expect it to be positive. So this is the stablecoin market. As you can see, it's growing very rapidly. So it's currently a $130 billion market, and there's trading volumes of $120 billion per day, and the growth rate in market cap has been 900%. So it's very big, and it's also growing very quickly. And since most of the trading is now done against stablecoins, the trading volume also is very high. It used to be the case that people trade against BTC, but now everyone trades against stablecoins. So this shows that stablecoins are a big market, and also still has even more potential to become even bigger. So the governance token UXP. So we will have a governance token called the UXP, and it will have the following functions. So first, obviously, the voting rights. So you will be able to vote on proposals that makes UXD protocol better. And for one example is you'll be able to choose which derivative DEX to integrate with, for example, or which asset to use as a delta neutral position. So you'll be able to vote on that kind of thing. And then the second thing is you'll be able to receive the cash flow from the delta neutral position. So UXP will actually generate revenue, and you can receive that revenue. This has to be voted, but UXP will then not be just a governance token, but it will actually receive interest. The third thing is the staking thing that I mentioned before, which relates to the insurance fund, but you can stake UXP in the insurance fund and receive more UXP. So the protocol benefits because the protocol has more money in the insurance fund, and the users also benefit because they get to receive more UXP tokens. So this is the token economics. So starting from the biggest part, 57% goes to community. This will be released through liquidity mining and other ways, which can be decided by the DAO. 20% goes to a team. This is vested over a total of 4 years. 15% goes to investors, which will be released over 2 years. There's 5% in the treasury, which is kept for future fundraisers, and then 3% for the token sale that we will do very likely end of this month or early next month. This will be used to capitalize the insurance fund. This is just company information. So if you guys are interested in starting up your own crypto project, I would recommend Dubai. Dubai is growing very quickly in crypto. The main reason I think is tax and regulation. So taxes, there's zero taxes, and regulations of crypto is very lax. So I would recommend Dubai is a good place to start up a crypto project. And these are our investors in our seed round. Multicoin led our seed round, and most of the investors are active in the Solana ecosystem, or actually all of them are active in the Solana ecosystem. We've also received funding from the Solana founders. So we plan on becoming the most dominant algo stablecoin on Solana. Since there's currently no algo stablecoin on Solana, we think it's a good opportunity. That is it.
Great. So if anybody, thanks so much. If anybody has any questions, feel free to drop in the chat or raise their hand. I mean, and the first question I have is, so let's say the funding rate does switch. Is that, I mean, like, is there some like manual or governance process where the people have to, because people have to decide basically to switch the position in the perp? Like does that make sense? Like it has to be decided to reverse everything. But is there a certain amount of days that the market is not in contango where then that reversal happens? Like, is that preset, or how does that work?
Well, so changing the position is based on requests from the users. So when users mint UXD, we put on the delta neutral position. When users redeem UXD, we unwind the position. We use the perpetual swap. So the perpetual swap is not is a little different from the futures. So futures are like 3 months later. It's a contract to buy or sell the underlying asset 3 months later or something like that. Whereas like a perpetual swap is just this derivative that's tied to the price of the spot using the index price. So the funding rate changes, and like sometimes the delta neutral position receives interest and sometimes it doesn't. And when it doesn't, when it has to pay the negative interest, that's when the insurance fund kicks in and they pay out the negative interest.
Okay, so kind of like the default position is basically being short on the perp.
Yeah. Like we will never be long perps.
Got it. Okay.
Yeah.
Like, let's say there's no so I guess that would be left to governance basically. Like, if the market is not in contango for a while, then perhaps it would switch, or that doesn't even make sense in the protocol.
No, I mean, there's one way to do it, but in general, you don't really switch. Like it's very difficult. You can't switch. Like one way is you borrow spot, you sell it at the market, and you long perps.
Yeah.
Then you are delta neutral, but you pay the borrowing cost now. So
yeah.
I'm not sure if that would be like a good solution.
Got it.
In general, I think during negative funding rates, you just have to kind of weather the storm. That's why we have the insurance fund.
That makes a lot of sense. And so the stablecoin is meant to be pegged to like the SOL price, like what, or is it like US dollar? Like what's
it's pegged to US dollar. Yeah, it's pegged to the US dollar.
Okay. So basically, like, so when people are minting, you're just taking the price at the time of of Sol, like the Sol USD pool or USDC pool or something to get that price? Is there some Oracle? Like how do you guys determine that?
Yeah, we use an Oracle kind. So we use the price from Mango Markets right now, and Mango
Okay.
Markets is the Oracle provider. So it's based on the Oracle.
Got it. Thanks. No, go ahead.
So I just had like um I guess I was unclear on the difference between the delta neutral and the cash carry trade. So is the cash carry the exact same thing, but instead of using a perp, you're using like monthly or like a quarterly futures?
Cash and carry is the thing that I think you're referring to, where you short like a quarterly or a monthly or
Okay,
futures,
cool,
right?
cool.
Yeah, delta neutral is the one where you use perps.
Yeah,
But like, yeah, I hope that
cool.
answers your question.
Yeah, I was just I messed up my terminology there. And then one more question. So I heard of Rye Finance
Oh
recently.
yeah, it's in Ethereum,
On
right?
Yeah, and I know it's another algorithmic stablecoin, but it's not pegged to the dollar. I think it's pegged to like somewhere close to like $3. And I was wondering like um if there was any similarity between UXD and not. But
Well,
I guess
Rye, I
not
think,
because you just mentioned.
yeah, like UXD is pegged to dollar, and then like Rye is non-pegged. And I think Rye is more similar to Ohm. I don't know if you know for
Yeah,
Ohm,
yeah,
Olympus down. I think there's more similarities there. I think the mechanism is quite different, but like they're both non-pegged, what do you call it? I guess non-pegged stable coins is what you call it. Um, but
yeah.
yeah, I think that's more close.
What are some risks, like whether more long tail or kind of like in the front of your mind that you guys have been thinking about?
Yeah,
The
like, well,
impact?
there's obvious risk, like smart contract risk, right? Where like UXC protocol gets exploited, or the derivative dex gets exploited. So like, since we're integrating with Mango Markets, if Mango Markets is exploited, that's a problem. Another risk is, since we're short perps on Mango, that means that there's someone who's long perps on Mango, and Mango Markets also has an insurance fund to make sure that when the price is very volatile, the longs can't pay the shorts. So when that happens, the insurance fund kicks in. But if the insurance fund runs out of money, then basically, the shorts will not receive the payment, and then the UXD will not be 100% backed. So those are risks. But it's kind of different in that, like, for instance, like with Terra, I don't know if you've heard of Terra UST. It's backed 100% by the governance token, and that means if the governance token goes to zero, UST will also go to zero. And we wanted to create a stablecoin that's not reliant on the value of the stablecoin, because we think that's self-referencing.
Yeah.
And that's kind of like, it's like a different trade-off in terms of risk.
That makes sense. Are you considering perhaps like diversifying the kind of like perp risk that by using other products like one of the co-founders of Drift like talked to us earlier, and they're also
Drift, like, so like, yeah, we'll definitely integrate with Drift at some point. Right now, actually, like, we're actually still on DevNet. We haven't actually launched mainnet yet. It's gonna be very soon. But yeah, we will integrate with Drift, and I'm in close contact with Cindy.
Somebody asked in the chat, how large is the insurance fund?
Well, yeah, so it's not live yet. So that's like when the token sale, like token sale is going to fund the insurance fund. So currently there's no insurance fund right now.
When actually will be the token sale? And is that something that's like probably people can participate in, or is it more, or is this like a private?
Yeah.
Investment?
It's public. It's like public, and anyone can participate. We'll have it end of this month or early next month. And then like there's a question like when mainnet. So like mainnet will launch after token sale, very soon, right after token sale, because like we need the insurance fund to launch to mainnet. Otherwise, you know, when the funding rate is negative, we can't pay it out. So we first do token sale to fund the insurance fund, and then we launch mainnet right after it.
So for the so you had mentioned in the presentation that the people who are the people who own UXD will actually be getting interest, but then you also later said that the people who own the governance token will also be getting interest. So
Right.
Are you gonna be like splitting that interest at some fixed percentage? Is that to be kind of configured by governance?
It's going to be configured by governance. So actually in the very beginning, the funding rate's going to go to the insurance fund. Like all of it's just going to go to the insurance fund. And then later, through governance, it will be split among the stakeholders. Yeah. So, and the percentage can kind of be decided by governance.
Makes sense. Yeah, some people ask more questions in the chat about like the token sale and the kind of the size of the
Yeah. Yeah, token sale will happen where? So on Solana, it's gonna be like Mango Market. So Mango Markets had a very similar token sale, and we're gonna kind of do it like very similar in a very similar way. Also, the question for the question regarding what is the mechanism that determines the size of the insurance fund. In the very beginning, the fund is going to be funded by the token sale, and then after that, the insurance fund is expected to grow because we will be doing liquidity mining with the funds. There will be users who stake their funds in the insurance fund, and so it's expected to kind of grow over time.
How do you actually decide on the initial like 10 billion total supply? So I feel like that seems to be pretty big compared to some other, like it seems like a lot of projects are narrowing in between like 100 million and 1 billion. I'm curious why you want to go about that.
Oh, I didn't say it's 10 billion. I don't know.
I meant, okay. I think I misread it. Sorry. Well,
I think it's maybe it's like this slide where it said like total market's like 130 billion.
no, the the number of like total token supply.
Sorry. Oh yeah, that's true.
Well,
That is true. It is 10 billion
yeah,
total token supply. It's the governance token, right?
yeah.
This can be like, it can be like 100 million, or it could be a billion. There's not much like of a reason. Like,
Okay.
yeah, like you know, if it's capped, it's the same thing.
Yeah, makes sense. Cool. Does anybody else have any other questions? Yeah, no, go ahead. Oh, you're muted.
Sorry about that. I saw the Miso tab up top, and I was wondering, the token sale is not going to be on Miso though, right? Because isn't that
No. Yeah, Miso is like on Ethereum, right? It's a sushi swap thing. So we're on Solana. So we will do the token sale on Solana on our platform. So you can go to the UXD website and we'll have it there. I'll just type it in here. We'll have like a token sale link here, and you'll be able to participate.
I saw the NFT thing as well when I was checking out the webpage earlier. What
you saw the what?
Well, in the top right corner, you guys have buy NFT on your.
Oh yeah, yeah, we do.
What is that like community and kind of like if you have the oh no way, that's sick. It's just kind of like
Unisocks.
Yeah, it's like Unisocks. It's literally like Unisocks.
Mango had those caps too, right?
Yeah, exactly. Yeah. So it's basically like that. Yeah. There's total 69, and like once it's all sold out, we use the funds to buy an NFT, and then the people who hold the NFT can vote on which NFT to buy. So it's kind of like this community thing.
It's pretty cool. Where is I'm curious, like, do you have any information on kind of the geographical distribution of people who've been interested so far, people who've been engaging in kind of DevNet?
So US was highest, and then it's Asia. Yeah. So Korea, Japan. Japan's second. Yeah. So the people who are most interested were US.
Interesting. Do you think it's just because of like the bank system regulation here? In terms of,
I mean, to be honest, I think the reason, well, I think I think it's probably like US people, they're just a lot of people in the US who are interested in crypto. I think that's just the main reason. Yeah.
yeah, that makes sense. What are like the best ways for anyone here to get involved or interested in the project? I want to like learn more about it, kind of use the protocol, etc.
Yeah, I mean, we have DevNet. So using DevNet is one way. What do you mean by like participate, like getting involved?
Yeah, like whether they want to contribute to the community, kind of learn more about the protocol.
Oh yeah, Discord we're active on Discord, obviously, and on Twitter, but mostly Discord is where a lot of the like we talk a lot. There's a lot of people who kind of start writing like articles on it. Yeah, I mean, I'm happy to like talk more about the project if you're on Discord. Just like drop me a message or anything.
Sure.
Would love to, yeah, talk more. Yeah.
Yeah. Are you guys looking for kind of like younger people to join the actual team?
Yeah. I mean, we kind of, I've already like hired like community managers and people like that, but we're always looking for people that can kind of contribute. Nothing comes to top of my mind right now, but definitely interested. I think crypto is a game where younger people have an edge over older people. So I definitely do like people who are like, I don't know, like obsessed about crypto. People who are the best people, the people who are best in crypto are like people who are just obsessed about it, and they just tend to have like a huge edge over people who are established. And so I am always looking for that kind of people.
Yeah, that makes sense. Somebody asked if you could talk about the crypto market in Japan and Korea.
So Japan, so about Japan, I think it also applies to Korea, is that like regulation is really killing the market. So a lot of people are moving to offshore exchanges. So a lot of people in Japan actually use FTX or Binance, and they trade heavily there. It's also kind of segregated where, since the language is, well, people speak Japanese in Japan and not that many people are fluent in English, that there's like this huge information asymmetry, and like coins like Ripple or XRP or ADA is like popular in Japan. And so there's actually like a huge opportunity for DeFi projects to go to Japan and you know, to kind of raise awareness. I've been doing that for some time, and it works very well because there's just literally zero competition. So that's how I would explain the Japanese crypto market, I guess. I think the same applies to Korea. Very retail driven, I would say. How do you raise seed funding? Okay, so this is a good question. Like, do the seed investors get company shares? Okay, so it depends on the investors. So some investors want equity that can be converted into tokens, and then there's some people who just want the tokens. Obviously, the people who just want the tokens are easier to deal with, and since there's no value in the company equity, so you know it's mostly the seed investors just want the tokens in general. And the typical check sizes. So normally there's a lead investor, and then everyone else is like, okay, I also want to join. And the lead investor typically takes 50 to 75% of the entire round, and then the rest is split among the other investors that want to tag along. So typical check sizes, the lead, it depends on how large the entire round is, but the lead, so then invest like 1 million to like 3 million, and then the other investors invest like 50K or 100K, 150K to like 300K. So that's like the typical check sizes, I would say. If at some point, like you become overcommitted. Generally, if the lead investor is strong, it's going to be overcommitted, and so normally like the other investors will not get to invest like that large amount. Is how it would happen. When I don't understand, like, what do you mean by like how do you raise seed funding for companies?
So I mean, generally in a traditional process, you usually go to the website and you like have a pitch deck and like you apply to the investors, right? And how does it typically work in the crypto space?
So like intros are best. There's several ways, but intros are best. So if you get introduced by, say, the founder of the portfolio company, that's strong. Or if you get introduced by someone who's worked with a VC, that's also quite strong. So intros are best, but you could also just go to the website and just send a pitch deck. Also, Twitter works very well. So most of the VCs are active on Twitter, so you could just DM them on Twitter. If you are interested in starting up a crypto project in the near future or even now, being active on Twitter is, I think, super important. So like it's like a social signaling thing, but like being active on Twitter is very important. And like even people like Sam would respond to your DMs. So like you should actually be like very aggressive in sending DMs. Like it's a numbers game, right? Like you pitch like 10, 20 VCs and like one of them like invest or something like that. And so like it's natural to get like rejected, but as long as you like keep on pitching, you have a chance. And then like I said, like even SBF, when I had like 100 followers, when I only had like 100 followers, he responded to my DM, and I was able to pitch Alameda. So like yeah, just like shooting your shot is I think super important. I don't know if that answers your question.
And that does, yeah. Thank you.
What's actually like setting up a kind of like actual company in Dubai and managing that? Like, is there even a need to do that? I'm curious, like like why you guys want to set up a physical entity?
Well, yeah, like you have to think about like taxes and regulation. So Dubai has 0 taxes, and in Japan, if you raise money in crypto, you get taxed at that timing. So I raised 3 million, I had to pay 1.5 million right out of the gate, which was unacceptable. So I was like, okay, what am I gonna do? I consulted a tax attorney that specializes in crypto. I talked to him. He said Dubai is good, and I was like, okay, I'm just gonna go to Dubai. And I just moved to Dubai, and I hired a Dubai consultant that specializes in like setting up companies in Dubai. So it's very easy. Like once you do that, like they do everything for you. So it's not that difficult. But yeah, like people, there's I think crypto founders like they either set up a company in Delaware, or they set up in some Bermuda or like BVI, or Singapore or Dubai. Like those are like the choices, I would say.
Makes sense. Does anybody else have questions?
I mean, how much does it like typically cost to set up and run a company in Dubai?
Right. 10K. So including like, so if you pay 10K to the consultant, they'll do everything for you, like get you the visa and everything. So 10,000 was what I paid. So like you can do it like after you're like reasonably sure that you're gonna get the fund from the VCs.
Mm-hmm.
Makes sense. Noel, go ahead.
So like I noticed that a lot of your backers are like heavily invested into the Solana ecosystem as well.
Yeah.
Like Multicoin and Alameda. And like what it makes sense. Like you'll get intro to the same people. Are you guys thinking of like looking at any other VCs that are like not necessarily dependent on the Solana ecosystem in the future? And then a second question is like with all the like backlog, I'm sure you saw like the drama with like Ribbon and like people like farming the airdrop, like VCs doing that.
Yeah.
For what's kind of been the response to that, and like with like people that are starting to like get off the ground, like what's been the response between the VCs and the protocols that are launching?
So like, yeah, like, so the answer to the first question is that, yeah, like if we expand to other chains, I think raising from other VCs makes a lot of sense for signaling and everything. That's obviously something that I think about. To answer the second question, like the farming, so even DYDX, it doesn't have to do with the VCs, but there's these accounts that use multiple accounts and like farm a lot of DYDX tokens, and they made like millions. And like there's among founders, there's like this kind of skepticism about airdrops now, because like it's kind of like we're not sure that like doing airdrops actually builds a strong community. If people know that if you use DevNet and if you mint some tokens on mainnet, whatever, you're gonna get a lot of tokens, people just create multiple accounts and do that and just try to just use the protocol to get the tokens. So more creative. I think one thing is that we have to be more creative about how we do airdrops, if we do any at all. And about VCs, I don't like, at least I don't talk to my VCs about like future, like how we're gonna do airdrops, just because of the ribbon drama. I think, yeah. I mean, you also have to be careful about who you bring on as VCs, because if they're kind of unethical, they might do these kind of things. So you have to kind of be careful about that.
Thank you.
How are you guys actually thinking about kind of better ways? I mean, for UXD personally, besides just doing these like normal airdrops that can obviously be simple.
Yeah, I mean, one thing is like filtering out based on like Discord, like how active they are on Discord, or I mean, that's like the only way that I can think of right now that you can be more creative, or that like really requires people to kind of contribute. But yeah, one of the reasons it's skeptical is that like basically almost every airdrop scheme has been tried now. And so it's hard to come up with like something very creative that no one has done before.
Yeah.
Which is why I'm personally kind of becoming more and more skeptical of airdrops nowadays.
Interesting. All right. Cool. Yeah, I guess yeah, probably end now. Well, yeah, no, thanks so much. So this is mostly purchasing learning about UXD. I think it's one of these things where like it's kind of hard to understand if you just read the docs, but like having you going over it made it a lot clearer, at least to me. That sounds like a super interesting project.
Yeah, it's great. Thanks for having me. Really enjoyed talking about it.
Of course. All right. See you.
Yeah.
Thank you.
Bye-bye.